Welcome back to Author's Note. A rescue deal for Cyprus, the nationalisation of a Dutch bank, and a last-minute scramble to wind up Anglo-Irish Bank's assets. Events that have reignited the debate over who bears the brunt of losses when a bank fails. Recent bailouts have left bondholders struggling to see where they sit in the pecking order. Joining me to discuss what's going on and what impact it will have on bank debt is Olivia Frieser, Head of European Credit Research at BNP Paribas. Welcome.
Thank you, Mary.
So, events in Cyprus, we've seen depositors on the streets up in arms that they're going to be hit with losses on their bank deposits. But there's an impact on the other side, which is the impact it's having on investors and how they think about where they stand when a bank fails. Maybe if we have a look at the first chart, you can kind of explain to us a little bit about what we're talking about. Mm-hmm. So what does this chart show?
This shows the level of subordination of various creditors, shareholders at the bottom, covered bonds and insured depositors at the top. In theory, when you have creditors that have to absorb losses in case of a bank failing, you should have the order being respected in terms of who absorbs losses first.
Yes.
In practice, it can be different, especially between uninsured depositors and senior unsecured. Mm-hmm. So if you look at the example in Cyprus, for the two banks, Laiki and Bank of Cyprus, you actually had two different rankings being used.
And can you explain a little bit more about what you mean by that? So what are the rankings that are different between the two banks there?
Sure. It looks like for Laiki, uninsured depositors and senior unsecured will fully absorb losses. So in this case, they would be pari passu. In the case of Bank of Cyprus, you would have full absorption of losses from the bondholders, but then only you have loss absorption from uninsured depositors. So they are not really sitting on a pari passu basis.
So what does this mean for bondholders? I mean, in the case of Cyprus, perhaps the main focus is on the depositors because there are relatively few bondholders in these banks. But what does it mean? Why are bondholders, investors feeling a little bit uncomfortable about Cyprus? And we mentioned some other cases as well.
I think they're coming to terms with the fact that senior bondholders could absorb losses in the future failure.
Yes.
European authorities are getting increasingly harsh on bondholders. We've seen it, as you mentioned, in the Dutch bank, SNS, Anglo-Irish, but also now in Cyprus. So I think especially the impairment or the losses on senior bondholders of a systemic bank in Cyprus, that brings home the message that actually in future failures we could have similar situations.
So a group of bondholders who thought they were sort of protected from losses are going to see losses probably imposed on them in the future.
Yes, we were talking about senior bondholders participating in losses in case of failure, but I think this is really making it more tangible, bringing it closer. Not that all situations will be dealt with in a similar manner.
Shall we have a look at the next chart and
yes.
see what it means for in reality? So what does this chart show us?
So this shows us the ratio of subordinated index to the senior CDS index, ITRAX. So the fact that it has come down here shows that actually senior has underperformed. While it was well known for investors that subordinated debt could bear some losses,
yes.
I think the realization is, or it was not priced in senior.
Thank you very much, Olivia, for coming in. And as events in Cyprus unfold, we'll be watching very closely.